equities markets are quite efficient right now. Many other markets are less efficient, real estate, syndicated lending, etc. So we're already seeing bonds on the Ethereum blockchain, Daimler-Benz, World Bank, some banks are going to be doing that pretty soon. So the mechanism will be much more fluid. The likelihood of double creation of different instruments goes to pretty close to zero. You won't have, as in the Dole Food Company, you won't have 100% or 140% of the shares voted. That will be impossible. You won't have naked short selling. But more importantly, in private equity and other kinds of situations in real estate, you'll have liquidity. You'll have the instant ability to get out of a position without illiquidity discounts and carve off a little bit of a position so that you can, instead of getting a loan, you can sell a piece of your property and improve it or something like that. So it's just a better technology. I mean, it used to be that equities were on pieces of paper, and in the 70s, in New York at least, they had to close the stock market a couple days a week and have half days because the messengers just couldn't deal with the load, and moved to different mechanisms, which ultimately led to the DTCC in the United States owning all the stock. Or it's actually it's like Sid and Company that's owned by the DTCC, which is owned by a bunch of financial institutions. So if you think you own stock, you really have a contract with your sub-broker, which has a contract with your broker, which has a contract with the central depository, and so none of us own any equity.